Hello guys, welcome back to another Lumley training video. In this one we're going to be doing some in-depth stock analysis on Smart Direct Club, ticker SDC. We are going to do two analysis videos today just because the market's moving so heavy, but we are going to start off SDC in the first video. Now, the reason we're doing some analysis on SDC is firstly, it's one of my leading gappers on my watch list, and it's up 9.1%. Reason for that is probably just because the overall market's been going up, and it has been selling off quite heavily, but this is now quite a good sign for SDC. We've had two green days now in a row, and as we can see, we've had the same pattern on SDC happen time and time again throughout the past year, in that it would gap down, come back and retrace, but you'll see once it kind of has that green streak, then from there that usually tends to be the bottom, and then it will come and retrace. We see had the occasional green day, and then it's once we got them in a row, that's when we started reversing into that gap fill. Then we did continue down, but then we created another gap fill, and again we saw the same thing, sell off, get the two greens in a row, at least two, and then we started, or that was our bottom before reversing, filling that gap before continuing to another gap fill. And now we've created another one at 523. It sold off, and now we finally kind of got that reversing looking, or reverse look, at least on SDC, where we've now had the two greens in a row. We've finally broken out of kind of this very sharp downward turn. I mean, if we just put a line, I mean, quite clearly it was a very strong downtrend, and we kind of broken up and closed out above it. So this is quite a good sign, at least from kind of that technical aspect, that we should continue up and hopefully go and fill that gap. So off this clean chart, we always look for the gap fills on our price targets, but one other thing we will look like, especially on a stock like SDC, which does continuously gap, is the retest of the highest move as well. So for about 445, that's what we'll change it to. Here we would also expect some sort of resistance. Doesn't mean this will kind of be the top before it continues down. We would expect it to still fill the gap, but we would expect still some sort of selling pressure. I mean, we saw in this gap, oh no, sorry, not that gap. Actually, we haven't really seen it on the two previous ones. I guess we got it a bit on this one here, where it came back, came into this level, pulled back before continuing higher. But when the difference between the gap and the gap is quite big, for example, in this case, if we quickly test the distance between this two alone, still about a 17% gap, just between those two resistance lines. So we will definitely be locking in some profits coming into that 440, just so when it does pull back, because it will most likely will, we don't feel the need to kind of get out the stock early. We can take some profits, feel comfortable letting it run a bit more, because it may pull back to say the $4, even $3.75, and then we would expect it to carry back up and go into that 523. So those are kind of our key resistance lines and kind of targets that we would use without looking at standard deviations. Now we'll go on to standard deviations so we can get some more targets. So yeah, buy zone, we would usually use the deviations on the bottom side to get long, but we can see as SEC is in such a strong downtrend, that we can't really use the deviations to buy, because then we would have to wait for it to come down to like $1.25, which is quite unrealistic even on SDC. It is one of these stocks, probably won't be holding it as investments, but more as a swing trade, because it's just shown that it can be quite a good and high percentage swing trade to do. That's more what we're looking to do it as. And you can see we're actually starting to push into statistical mean. This is something we don't always like the look of, because when stocks come into statistical means, it's a bit hard to predict where they're going to go. So that is one thing we will have to look at on SDC. If it comes into statistical mean of around 450, sells off and breaks say the $3, then it's most likely going to continue lower, at least for the time being. However, if we come to statistical mean, get some pressure, but we're able to kind of just break through, then we would expect it to continue up and come into our targets of the 445, the 523. And then I will be getting out the majority of the trade at 523 latest, because it is something I'm personally on. If you're watching the small account challenge, you would know we're already in SDC. But yeah, at 523, that's when I'd be at the majority, because it's such a strong gap fill that most likely from there we will get some strong selling pressure off, even if it's going to continue higher. So as I'm not looking to be in trades for months and months at a time, if I'm looking at 523, that will probably be the optimal time to be in, because then it'll probably pull back for a week, two, maybe three, even if it's going to continue higher. But if you are looking to hold further, then you can be using the first deviation for targets, and that's at 563 you can use as a target, and 570. And we can delete these higher up old gap fills. But yeah, those will kind of be our key targets as of right now to the upside. The 445, 523, they're going to be those key two that we'll mainly be using for looking at profits. Then 562 and 650, if you're looking to get even further targets, those would be those next sets of targets. And then again, as always, we'll just look at the deviation if you're looking to hold for even further moves. 780, 950, basically $10, 1252, 1220. All these kind of levels, we would expect to see some pressure. Obviously, depending on your outlook on kind of SDC, you'll decide whether you think it's going to hit those higher targets. But that's the main reason I'll be getting at 523, which is probably the optimal time to be in the trade. Us pushing to, you know, the 780s, the $10 may happen. But firstly, it would require a lot more risk, which I would really want to be holding through. And just quite a lot of time when we could be getting different trades instead. So for me, right now, personally, something I'm long. Should see some hesitation into this 350 area. Again, if we kind of bounce back from this and be pushed down and hold below $3, then we would expect it to probably push lower instead of trying to break up into an uptrend for now. Or should we even say a temporary bounce. But if we do break through, then 445 we'll definitely be locking in some profits. 523 I'll be locking in the majority, if not all, the profits at that level. If you're looking to hold on further, than the 560, 650, 780, 950, $10, $12.20, and $12.50 are kind of all upside targets. But one thing to do be a bit hesitant on the stock going up is, you can see on the screen, I mean, you don't even need to have standard deviations. You can see on this, it's a very clear and strong downtrend. When you see stocks like that, it's usually a lot riskier to be holding a long term, and that's why I'll be getting out at that gap fill, because it's a pattern that's shown us multiple times that it should fill these gaps. But then from there, it has continued down every time, at least in the past year. So to me, it doesn't make sense holding past there, but again, using your own risk tolerance, your own strategies, you may find that you have better reward if you just wait for it to break higher. So I hope you enjoyed the breakdown on SDC. Hope to see you in the next one, and that's it. Peace.